We've done a lot of buying in the South, sort of from Florida to Texas, because we're a big fan of the demographic profile, tremendous, population growth, job growth, and so on. And so we've been trying to take advantage of that.
And it's with rentals. And one thing that you said in some recent data is that home ownership may not be the smart investment we once thought it was. Can you explain?
So for about 70 years trailing before the financial crisis, the United States housing market only experienced one outcome every year, and that is the value of your house went up. And then that all turned severely, as we all know, and created the financial crisis. So my point is, generations of Americans thought that the best thing you could ever do from a personal investment perspective was buy a house. And then all of a sudden that turned upside down, violently and suddenly. It's not to say it's a bad investment today, but it is to say the assumption that it's automatically a good investment has been, I think, put to bed for life.
Do you think, though, that going forward, it is not a good investment for some individuals?
I wouldn't tell someone it's a bad idea to buy a house. The housing market very recently is experiencing a little bit of a shift in sentiment maybe, but it's been on a wonderful run for 8, 9, 10 years now since the bottom of the crash. But there are a lot of considerations about buying a house beyond just thinking about it from a financial investment perspective. So I think it's case by case. Big picture, I'm a fan of the housing market because there are some things that the for-sale housing market tracks just like we do in the rental housing market, such as population growth, household formation, and so on. So I don't think that there's a crash in the housing market coming by any means.
Okay, so one thing with the rental multifamily properties, there's been a lot of interest in that space for years from Blackstone and some of the other behemoth investors out there. Do you think that values at this point have kind of peaked out and that it is time to sell some of these in your portfolio?
Well, we're definitely selling because it's a fine time to sell. There's no other way to say it. There's quite a bit of capital in the space. But as far as whether values have peaked, I think it's very difficult to say because, as I said, I don't know how to forecast the cycle. I think the most important thing to do is take a long-term view and say, I'm going to buy this property in 2019 because I'm perfectly happy owning it till 2029, and what happens along the way, we'll see.
Do you think that in Boston, in New York, some of these markets, that there is more pain to be had in some of the property values?
Yes. So Boston, New York, maybe San Francisco, some of the markets that are the highest profile, that attract the sort of the highest price point product, are where we're seeing the most softening. The markets that attracted the most institutional capital, that led to the most new supply, that have led to a little bit of a market, correction's too strong a word, but softening. So in other words, if you have half a dozen towers coming out of the ground at the same time within a few blocks of each other, say in San Francisco or Boston or something like that, that's where you might have a little bit of short-term trouble. But that's very, very concentrated, not only from a geographic perspective, but from a price point perspective, and is not at all indicative of the market broadly.
How much more do you see the declines deepening from here in some of those regions?
I don't think a tremendous amount more because we're not meaningfully overbuilt. I mean, the apartment market nationally is about 94, 95% occupied. And even in those markets that are experiencing some softening, we still have very strong occupancies. We don't have a tremendous amount of new pipeline coming. So I think that'll normalize. Even if there's a recession sooner rather than later, maybe that'll extend some of the pain, but nothing severe.
So you said you were selling. Are you using the cash to fill a mattress, or are you actually buying some things as well?
We're buying as well. So what we do frequently is when we sell a property, we offer our investors the ability to roll into the next property and defer their capital gains. It's called a 1031 exchange. It's very popular. And so we're buying as well as selling. It's a fine time to sell, and I'm a big believer of chips off the table. But again, I'm also a big believer in the long-term, big picture profile of the apartment market. So I'm happy to take positions again, understanding that I'm not making a bet what the value is going to be in 2021. I'm making a bet that there are long-term drivers at my back that'll take me to 2029.
So where are you buying?
Well, our geography has expanded, so we've been investing still in our historic territory of, say, Florida to Texas quite a bit, but we've also expanded selectively into the Midwest and into other property types. So we've been buying student housing properties and we've been buying senior housing properties.
What kind of income does your portfolio of properties produce?
We distribute between about a 6.25% and 6.5% current return right now. Around the portfolio, we typically start a little lower. We do a lot of work to improve the property, increase the rents, and then increase the current distribution.